Shares of FirstRand tumbled more than 5% in midday trade as the stock traded ex-dividend or without the right to its latest dividend from today. In other news, FirstRand won't fight the decision by the Zambian government to cancel the purchase of Finance Bank Zambia, this according to the Business Day. The market cap of FirstRand is 116 billion rand, PE of 11.3 and a dividend yield of 3.9%. Gentlemen, let's start with that failed deal in Zambia, and Viv will get your opinion first. The Zambian Central Bank deciding to terminate that deal of 5.4 million rand. And people saying that perhaps this was politically motivated. President Sata obviously firing the central bank governor and a number of other bureaucrats. What is your take on the Zambian deal, particularly around the fact that they had a Nigerian deal that also fell through and that they're slightly behind the curve relative to Standard Bank on the African continent?
Yeah, look, I mean, with the change of government in Zambia, there's been a whole movement against some of the foreign deals that we've made. They focus primarily on the Chinese. You know, they were talking about I think even suspended trade in from these mines for a couple of days. The new government is coming to place. Apparently, the person that used to own the Zambian bank, I can't remember his exact name, I think it's Raja, was against the deal, claimed he was in trouble before because of apparently he had conducted some kind of fraud, etc. And the previous government have obviously approved the deal and he was against it, and now the new government is coming to play, and it's likely that he has connections with the new government. So it doesn't make sense to try and fight such a connected individual, especially when the new government is just basically trying to throw its weight around at the moment. So I would agree. It wasn't a huge deal. It was obviously important symbolically to get into Africa, and that's something that all the banks are trying to do. I mean, Absa with its one bank for Africa policy, etc. So every bank in South Africa, obviously, it's trying to take advantage of the fact that there's such a large number of unbanked people in the world, probably the largest population of unbanked people still left in the world, available in Africa. And we, South African banks, and especially when the world has such this difficulty with the banking sector at the moment, it's an opportunity for us. But I don't think it was such an important deal at the longer scope, especially consider the size of the deal.
Chris, your take on this failed Zambian deal, obviously hurting their vision to be the African financial services group of choice. Would you like to add to what Viv said, your comment?
Yeah, I think really just to say that I think you're quite right. When in your preamble, you said, look, they are behind the curve relative to most of their competitors. Okay, Nedbank's probably a bit further behind the curve than they are. But I think what it does, it highlights that while there are tremendous opportunities in the rest of Africa, outstanding opportunities, you've got to be really very, very careful indeed. About all sorts of deals. You've got to dot the I's, cross the T's. I'm not saying FirstRand didn't do that. Obviously, they would have done it very, very carefully. But it just highlights the very, very great difficulties that do exist in Africa. And as Whitey Basson of ShopRite says on many occasions, Africa is not for sissies.
Well, clearly not, and that's why they're going into India. They're starting a retail banking business there as of December this year. FirstRand already has a full commercial banking license in India. Yep. What is the attraction of India relative to China or some of the other two BRICS nations?
I think a number of things. First of all, the sheer size of the population. I mean, 1.2 billion people, and it's growing. You know, you don't have the impact of this one-child policy that the Chinese have had, because, and I think, Viv, you can probably correct me on this if I'm not mistaken, but I think we're going to see India overtaking China as the largest country in the world in terms of population in about 10 years' time. So it's the numbers, it's the fact that it is underbanked, you know, and I think it's you know, it's not too far away. I mean, it really is. The one problem you're going to have with India, though, as SAB Miller has had, as Whitey Basson and the guys at ShopRite have had, is this huge bureaucracy that exists there. It is changing. Look, it's the world's greatest democracy. Everyone's got a shout. You know, it's not like you're told you can't actually make a contribution in India. You certainly can. So I think that's where the biggest problems will lie, is in the bureaucratic nature of the place. But the potential is absolutely enormous.
Viv, what is your take on the move into India? Obviously now FirstRand will become the first African lender to start retail banking India. How do you feel about the move?
Yes, I mean, look, India is much more than China. I mean, we're talking about growth rates that are significantly, a little lower, not significantly low, but lower than China, but starting off from a much lower base. That being said, if you look at historical graphs of where China was and where India is, etc., you'd find maybe a 10-year gap, pretty much from the time China started its reformation of its economy, and India started about 10 years later. And that's kind of the difference you'll see between the two economies. Should India prove to be the same kind of grower as China is, obviously a great deal of opportunity there. But as Chris mentioned, the bureaucracy is quite difficult, even for the Indian company. I mean, there was a story I think it's last year, the year before, about Tata Motors, a huge Indian brand, trying to get a plant built in the state in India. and 400 farmers managed to scupper what was going to be a multi-billion-dollar plant by a massive local company. And that's the kind of troubles you'll have in India. The democracy is messy. In China, people say this is going to be done, it's going to be done. In India, the case is not quite the same. It's much, much messier than in China. Let's
touch on the sale of OUTsurance. They sold this 45% stake to Rand Merchant Insurance Holdings for 3.64 billion Rand. And what I really want to zoom in on is, has bancassurance failed? I mean, we're seeing Standard Bank with Stanlib. Obviously now that business not doing too well either. But with the sale of OUTsurance, clearly it was a non-strategic asset, number one, and it was great business, but it didn't sell directly to FirstRand's clients. So what is your take, gentlemen, on bancassurance? Chris, we'll start
I don't think it's fair to say that bancassurance has failed. And I think if you speak to most bankers, they would disagree with that. You know, I think perhaps the way in which they've gone about it, and they've gone about it in very different ways in the different banking organizations, has not perhaps yielded the results that they were looking for originally. Some people have suggested, and quite a few people have suggested to me, that what FirstRand is doing is they're cleaning up the entire structure of FirstRand with a view to perhaps selling it to a foreign buyer. And I suppose that's a possibility as well, because the way this has been done, it's very, very clever. And what you've got now with FirstRand is a very, very clean banking operation without any of the other accoutrements.
They're clearly focusing on financial services now as opposed to being a holding company.
Yes.
And so based on that, Chris, would you say that FirstRand is a hot stock or not?
Look, we like the stock. We don't hold it in the portfolio. Generally speaking, we can't get awfully excited about the outlook for the banking sector at this point in time. So from that perspective, it's not hot. I think if ambient conditions were better, then it probably might be.
Viv, how do you feel on FirstRand? It was down 3.87% on the day, and we mentioned that they were trading ex-div. How do you feel, hot or not?
Look, I don't think there's anyone out there in the world at the moment who's in a situation to actually buy a bank like FirstRand. I mean, just the kind of problems we have in the global financial institutions, I don't see anybody out there other than the Chinese stepping in to buy a bank like FirstRand. So I don't think there's the opportunity that you're going to find that someone's going to step in and give you a massive kick up because of buying the company and having a big premium, etc. The banking sector, I agree, is probably one of the weakest sectors in the economy. We are going to see more troubles next year. We are probably going to see some kind of problem fight between inflation versus, you know, interest rates coming through probably by the middle of next year at least. And so I'm not too keen on the banking sector. But as a whole, the company does look to be a well-managed, good company.
So hot for you then, FirstRand?
Not yet.
Not yet, because of the problems in the financial services industry broadly.
Yes.
Well, let's turn our attention to something tastier now. In a trading update, Taste Holdings said it expects headline earnings per share for the 6 months ended August 2011 to increase by between 40% and 60% when compared to the same period last year. The group announced earnings and headline earnings per share at 2.1 cents in 2010, with revenue of 92.5 million Rand and operating profit at 7.4 million Rand. The company said it expected to publish its results this week, and we actually thought we'd have those results out today, but sadly we didn't. The market cap of Taste Holdings sitting at 220 million Rand, price earnings at 12, dividend yield at 2.3%. Let's just start with the fact that this is traditionally meant to be a food business. And they've got this Natal Wholesale Jewelers. How do we reconcile that? Chris?
You know, I think if you talk to the CEO of the company, Carlo Gonzago, I mean, he's a tremendous operator and he's got a fantastic background in the industry. He will tell you, quite simply and straightforwardly, that franchising is franchising is franchising. And what relates to food can just as easily be applied to jewellery or anything else for that matter. And I think a lot of investors out there have been very skeptical of that view for a long time. But you know what? Carlo's actually had the last laugh because, you know, you see the kind of results we're talking about. It is looking very, very good indeed. I'm still a little bit skeptical. I still have to be entirely convinced of it. But, you know, when you look at the kind of initiatives that they've talked about, for example, putting some of their stalls in macros and things like that, it's actually very clever. I think it's a highly innovative company. For me, as I say, there's a psychological block here. But I think once I get over that, perhaps I'll become more more attuned to it.
Taste Holdings, Viv, is a small cap player relative to someone like Famous Brands and even Spur Corporation, really not having as much brand power. Someone like Famous Brands has got Wimpy backing them up. Taste, on the other hand, has got Maxis, Scooters, St. Elmo's Pizzas. How are they going to get that brand power up, number one? And do we then start thinking in terms of acquisitive growth? Because that's what Famous Brands have been doing. Largely cash generative these businesses are, but what are they going to do to maintain the brand power or even grow it further? Yeah,
look, I mean, obviously all the brands we mentioned are but smaller than ones that Famous Brands are looking at the moment. Also, I don't think the chicken brands are particularly strong with the taste at the moment, and chicken in this country does a bit better than most other forms of fast food, and you've seen that across them in what's normally like the top-rated brands in this country, the chicken fast food retailers. That being said, I'm agreeing with Chris here. I don't like a stock that's that confused. You know, I mean, totally different sectors. It's hard to see how you develop your special managerial abilities with such diverse, markets and such diverse.
But are they
companies.
not just diversifying their income streams by having this jewelry operation as well?
Yeah, but put it this way. I mean, I would expect, unless you're an extremely brilliant manager, that you'd be much more suited if you just focused on, much better as a manager, if you just focused on food or just focused on jewelry. Unless you're an incredibly hardworking, incredibly a genius among managers, to try and do well in both those separate industries is extremely difficult, I would think.
And the take of acquisitions, now clearly they're going to be competing with famous brands trying to get acquisitions. What are they going to do? What do you anticipate that to be?
Look, they are under caution at the moment. The stock has also done extremely well in the last few months. I mean, it's gone from, I think it's 140% since May, which is an incredible return, especially in the kind of markets we're seeing right now. So, look, it's done quite well. I don't know anything particularly about the acquisitions that they might be undertaking, but possibly looking at that kind of price movement, maybe the market's anticipating them being taken over.
Chris, let's turn our attention now to peace in particular. I mean, Viv mentioned that chicken is also quite a popular fast food among consumers. They really want to score on consumers who are time-pressed and consumers who are really going to recover from some of the initiatives that have been put in place. But they're going to be focusing on a whole new demographic of consumers. We take a look at famous brands. They've got Debonairs in Soweto, which is its best performing operation. Your take on that?
I think if you look at this whole food franchise market, it's getting a little bit crowded. I mean, we heard a few months ago that Burger King's been eyeing up South Africa. We heard last week that Pizza Hut's coming back in after a long absence. So it is getting very, very crowded indeed. And in terms of making acquisitions, it's going to become increasingly difficult to make any meaningful acquisitions out there. So I think it's going to be a tough market. And when you're there with only one or two brands, I mean, they've basically got scooters and they've got maxis. I think it's going to be tough. Look, maybe that's one of the reasons why they decided a few years ago, let's diversify it into something which is completely different.
And the likelihood of actually targeting a specific demographic group, though, if you look at how well famous brands, Debonairs in particular, is doing in Soweto.
Yeah, famous brands, if you look at what they're doing, and they're also going to be taking the pub concept into Soweto. So, you're right, they're targeting the townships unashamedly, because that is where the numbers of people are, that's where the money is, and that's where the future is, basically. It's not as crystal clear with Taste that they're going for a particular demographic there.
Viv, surely we should be encouraged by the fact that they've recently moved from Altex onto the main board, and Black Star's just acquired 6.5% stake in Taste. What do you make of that? The fact that they are saying that their headline earnings per share will be up between 40 and 60% in this trading update. Are we encouraged? Do we expect that these results, which were meant to be released today, will be positive?
Yeah, look, obviously the market's expected that. I mean, with the kind of movement I talked about, the market's looking for something quite good to come out of the company. I'm a bit nervous about the South African consumer sector, quite frankly, going forward. I do think that we are probably going to see a great deal more difficulty, a great deal more hurt coming on the consumer, especially next year when we have all these new, tariffs, for instance, the road tariffs, etc., coming into play, when we have, the possibility of interest rates being raised by the second half of next year. So in the consumer sector, I do think discretionary income is probably going to be under pressure. And a company like, famous brands, maybe it might be able to, get through by having the premier brands in specific sectors, like Gilmour is probably the premier pizza brand, etc. out there. Would a secondary brand company like Taste be able to do quite as well in a tough environment? I'm not quite sure. Sounds
like Taste Holdings isn't so tasty then for you, Viv. You're not giving it a hot?
No, I'm not.
How about you, Chris? How do you feel about Taste Holdings?
I think a lot of what has happened has been the old adage, buy on rumour, sell on fact. And the share price, as Viv said earlier, has had a huge rise recently. So from these levels, it's no longer that the compelling buy that it was a few months ago, so not really hot now.
Well, it's trading at a 12-month high right now at 1920. I know it was down 5.47%. Does that not encourage you at all? No, not? No,
it's great. And don't get me wrong, it's wonderful. But what I'm saying is any appreciation from this kind of level, I think, is probably going to be limited, given the fact that they've had such a huge run. And I think it's been discounting the kind of earnings growth that we're actually anticipating.
Not hot for Chris either.